Well, let's get more now. We're joined here in the studio by Jameel Ahmad, who is the chief analyst at the online trading brokerage GTC. Welcome to the program, Jameel. Just looking at the market boards today, I mean, a sea of red ink pretty much everywhere you look. And those tariffs weren't a surprise. Most people were expecting them. But do you think the dramatic reaction that we've seen suggests that perhaps things are worse than what the markets have priced in?
I think somewhat. We have to consider an overall picture here. Firstly, global financial markets across multiple asset classes were at very high levels, in some cases all-time high levels just recently. So investors have taken this as an opportunity to take some profits off the table. But secondly, yes, these tariffs are definitely more widespread and impactful, at least on headline, than some thought they would be. Because we always had this, is he serious? Are they really going to do it? And how is this going to work? And now we're starting to see from some of the comments that maybe we're not negotiating only for a deal, maybe we're prepared to do this for the long game. If you look at the comments overnight, some medicine is good sometimes. Yes, we know there'll be some disruption, suggesting that we might see this trade war, trade tariffs, however we're going to phrase it, be here for a prolonged period. Whereas before, we thought we were negotiating. This is about making deals. Perhaps we are still going to make a deal, but we're going to play poker or something for some time and see who puts their cards on the table. And that's why global financial markets, whether we're looking at safe havens like gold, the safe haven of the US dollar, cryptocurrencies, oil, everything's falling because investors are reacting to concerns of what impact this will have on industries, economies, and of course global financial markets come into the mix.
I was going to ask you about some safe havens in just a moment, but before that, I mean, a lot of people are sounding the alarm. You've got people who are close to President Trump, like Bill Ackman, you know, the hedge fund manager, the JP Morgan Chase CEO, James Dimon, warning about the possibility, the very serious possibility of a global recession. I mean, what is the impact we're talking about here on the global economy?
Well, there's direct impacts and there's indirect impacts. It's those indirect impacts that investors and everyday people are concerned about now. Because we don't know how this is going to impact XYZ industry, what this might mean to job creation, what it might mean to wage growth, what it might mean to whether we will not be able to afford a product in certain months that we're expecting to buy. Those are the indirect impacts. But directly, you're seeing major think tanks and institutions are up in their forecasts substantially for maybe a global recession. But even if we just take what happened in the US, we saw at the end of 2024, institutions predicting maybe a 15 to 20% chance of a recession in the US. We flash forward towards the end of Q1, obviously we're only 2 weeks into April so far, we're seeing those forecasts up by nearly double, in some ways more. And now, after these tariffs have finally been announced, some global institutions are not just suggesting a US recession, but a global recession. So the stakes are getting higher.
Yeah, some of the forecasts are up to the sort of 60% probability mark. That's the one coming from JP Morgan. Now, we were talking about safe havens a moment ago. Gold, the most classic safe haven of them all. And yet, gold seems to have fallen a little bit. You'd have thought it would go up at times like this, wouldn't you? It's
actually fallen by $100 since these tariffs were announced on Wednesday of last week, of course, Liberation Day. Now, we have to take into account that gold prices have hit more all-time highs than I can even count anymore over the past 9 to 12 months. But as a result of this investor concern, investor shock, we're seeing profits being taken across so many asset classes. Gold is one, US dollar, other aspects of commodities, global financial markets, stocks. Should these tariffs continue for the longer term? Should the probability increase that we are going to have a global recession? I hope not, but a long period of global uncertainty, then maybe we're looking at another opportunity to invest in gold. There's also the other point of view. Maybe these tariffs were priced in somewhat for gold, but other asset classes, not the case. For example, oil has fallen now $10 since the middle of last week. We have Bitcoin and cryptocurrencies fallen by 15 to 20,000, and global financial markets, even in the US, they haven't seen these falls since the early weeks of COVID. So no matter where you look, we're seeing volatility.
Yeah, some of these norms about safe havens are being challenged, aren't they, by what you're saying, gold, and then of course Bitcoin, the safe haven of the modern age, and that's struggling as well, you say?
I've always seen this, I would say, as somewhat of a clickbait that we shouldn't just call Bitcoin a safe haven. If you look at the traditional mechanisms of Bitcoin and when it's gone up and its volatility, first of the volatility itself, when any asset, and I admit it's an asset that we can consider, when it can shift by 5, 7, 9, 10% per day or trading session, that's not the norms of any safe haven in traditional economics. Nonetheless, what we can say is that it's an asset which investors purchase when they want to take on more risk in their portfolio. Oil is also considered as a risk asset. Stocks are considered a risk asset. At the moment, we're taking risk off the table, which is why some of those alternative assets, such as Bitcoin, cryptocurrencies, are also falling. And they're falling steeply like everything else.
Okay, and just to wrap it up, give us some positive news. Are there any rays of light out there? Are there any asset classes or stocks that are bucking this rather negative set of trends?
There's always opportunities in financial markets. We also look at the opportunity now in the Japanese yen. One, because it is considered as a safe haven currency. And secondly, if we look at the historical context, when there's periods of uncertainty, investors are lured to the Japanese currency. We're seeing this again in recent sessions. Secondly, the Japanese yen has been historically now undervalued for a number of years. So investors are jumping on the opportunity there. They're also looking at the Swiss franc. Let's see how this plays out. This is like a big movie now, these trade tariffs. How is this movie going to play out? How much popcorn are we going to need? And then we'll see whether this is a good movie or is a bad movie. Maybe it's going to be over in a matter of days. We never know.
Well, I like the fact you've managed to bring us into some more positive ways of describing all of this towards the end. We're going to leave it there. Thank you very much indeed, Jameel Ahmad, Chief Analyst at the online trading brokerage GTC. Thanks for your time.
Thank you.